Hello, welcome back to WINFX Trading YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of visiting this channel, do your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content, and try to refer this channel to your network so that YouTube pushes to a level of audience. Try to like. Okay, in this video I'm gonna do is gonna change a lot of people's life, and many people have been losing a lot of money trading simply because they could not understand the reality of what I'm going to explain in this video. So the topic is seasons and directions in forex synthetic market and how it affects your trading psychology. So most time you will see opportunity in the market, but you will be afraid to place trade. This is because your psychology is compromised. So in this video I'm going to treat this problem. So this is the things I'm going to explain. They include season, direction, real meaning of trends, bullish order block, bearish order block, zero differentials. So these are the elements in this topic. Okay, so before I continue, just ponder about your trading journey, from the point you started knowing about trading and the point you started going live to trade. What has been the issue in your mindset? What has been the issue in your emotions and psychology? How do you interact with your opportunity? When you place trade, how do you feel? Do you feel defeated? When you see opportunity, do you feel afraid to take the opportunity? This video is going to tell you the reason why you feel the way you feel. Okay, so in trading there's what we call season. Just like in the universe, we have different types of season. Okay, we have rainy season, we have dry season, we have the winter and the summer, we have the spring and fall. Okay, so if in the rainy season we are trying to start farming, you know you're gonna lose a lot of money unless you deploy artificial rain, which is irrigation. So when you are trading, always try to align with the season. You should not be buying in a selling season, and you should not be selling in a buying season. Okay, now the issue of direction. One market changes direction, it affects you as a trader if you cannot be aware of that change in direction. Okay, and what is direction? Direction is the sense of where market is breaking levels at the current period of time. The sense of where market is breaking levels, especially when the number of broken levels is many compared to the other ones in the vicinity. And so direction is one of the things that can destroy your trading psychology, because if you buy and the market sells, and if you sell and the market buys, you lose more money than ever. Okay, so season and direction, you need to understand it. The next thing I'm going to put on in this video is bullish order block. Now, bullish order block is when market is creating buy orders, but you as a trader, you didn't actually understand what is happening. And then if market is creating buy order or buy order blocks and you are trying to sell, those order block has a lot of potentials to wipe your account, because you are trading against those order block. And when market is creating bearish order block or selling block and you are trying to buy, you're gonna lose more money because you are trying to trade against those order block. So that is bearish order block. It means that the market makers are creating sell orders, but because of your lack of understanding of what the market is doing, you are trying to trade against it. Okay, so I'm going to explain this throughout this video. The next thing is zero differentials. There is no way you want to make profit and you just want to place trades when the market is still moving in opposite direction. You place a trade, take for instance you buy and the market is still selling. It means that you have a non-zero differential entry. An entry that automatically gets into profit is entry that was made at zero differentials, because at those entry price, at those prices, there is critical points. There is critical point, there is, if you trade continuity and it went straight to profit, there is continuity points. But if you trade and the market, like if you trade the reversals and the market reverse exactly as you wish, then there is a critical point. Okay, because a critical point there means that the market will actually reverse without going against you. So these are the things that zero differential means for you. Okay, this is just the explanation of what this topic is all about. I'm going to chart now to start analyzing and set this into a real life application so that you can be able to appreciate this video. Okay, right now this is jump 10 index. This is jump 10 index. You see that I have already placed a buy trade and is automatically in profit. Okay, now if you want to actually deploy this topic, a real life application, you pretty much need to study the top-down behavior of the market. Like, you need to know what is happening in the market from the higher time frames to the lower time frame. Pretty much, at least you can start from the monthly. It's very necessary because nothing good comes easily like that. You need to work hard for it. Okay, so you need to run your top-down analysis at least to get the market structure, and then you need to run the lower time. You need to also go to lower time frame. After running from higher towards the lower time frame, you need to finalize at the lower time frame the structure that you are trading. You cannot be buying when the structure is selling, and you cannot be selling when the structure is buying. Structure, understanding of structure is necessary. Okay, the fact or the statement that you should follow the trend does not really work, because most time you see that market is actually downtrend in the higher time frame, and then you feel like you don't want to disobey the rule of thumb that say that you should follow the trend, and then you actually follow the trend, yet you still lose. The reason why you lose is because the real meaning of trend is not yet understood by you as a trader. So what is trend? A trend is a particular time variation of price with consistency. So if market is going up steady for a given period of time, that is trend. Okay, so your ability to actually consider a given interval of time and say, oh, this is what this market is doing at this interval of time, at that time frame, of observation, the time frame that you're observing, you should actually be able to say that this is the trend. It doesn't matter what you know about the market at bigger time frames. It doesn't matter what you know about the market in the long term, but at this given interval of time, let's say for 30 minutes, for 1 hour, for 4 hours, what is the real direction of this market? What is it doing? Is it buy or is it selling? Okay, so you can see I'm just trying to understand this market for me to actually deploy what this topic is saying, I need to understand this market in its entirety. Okay, so you see that this level is a very strong resistance, because you see that it was a support initially, but price break out of it, making it a resistance, and then we have rejections, see rejections. So there is selling pressure, like the overall trend is selling trend. Okay, but why is it that I went ahead and buy? Why? The market is not generally subject to the overall trend, but is subject to the summation of downtrend and uptrend. So in all the market events, the downtrend must exist in combination with uptrend to control your like to influence the psychology of traders, because a lot of people have already stick to trend. But while sticking to trend, you do not understand that there are oppositions to that trend you are sticking to, and your stop loss is at threat. Your stop loss is actually facing a lot of triggering, because when the trend change against you, the market doesn't care if you are following the trend at that point in time. Okay, so this is what I'm going to explain here. Now, I have understood that in the monthly time frame, the overall trend is basically a selling pressure for the moment, but in the long run, it is buying, because you can see that we have more buying candle than selling candle within this vicinity. You see, so it's buying in the long run, but it's selling shortly. But what is active here in the long term, what is active here in the higher time frame is selling pressure. So when you're analyzing market, you analyze it, as if you want to discover something, because you really want to discover something so that you make the right decision. So do it as if you're looking for a precious something, like you are searching for gold. You want to understand everything about that market so that you will not make mistake when you start placing the trade. Okay, so if you step down to weekly time frame, you discover that there is probability that this market is gonna buy, even though it has been selling. It is like the selling volume is going to zero and the buying volume is going to increase to infinity. But you see, there is a break of structure, a pullback, so continuation. So anything that makes you not to run top-down analysis, no matter how crazy it sounds, that thing does not want you to succeed, because that day you feel like you want to just focus on one particular time frame, that is the day you are going to blow your account. Okay, you might be lucky today, you will not be lucky forever. That is the issue. So consistency is what you need, and the only way is to stress yourself, like put in the energy, try to find out everything about that asset before making a decision. Okay, it could take you several hours, several days, several weeks, but it's worth it, because once you place that trade, you're gonna win. Okay, so you see, we have discovered a probability of buying, right? So now we go to daily time frame. In the daily time frame, you discover that we have a trend line. So this is the trend line, and basically market break the trend line. So but if you look at this trend line, this is uptrend, meaning that there is probability that the uptrend event is still active. Okay, because after price break this monthly resistance, a strong buy event happen. So what do you expect? That is a demand zone, a kind of demand zone, because it creates a very long buy. Okay, and so we expect a retest to this demand zone. Okay, and that's what price did. It created a retest to this demand zone, and so we expect pullback, but it may not happen as much as you think, because markets have to range and break out before you can see where it is going, right? So that's why you should keep analyzing to see what is really happening. So this is 4-hour time frame. In this 4-hour time frame, we have this bearish channel, and then we have here is a channel. So this is where at lower time frame, this is where plain analysis is very important, because when market move, they do so in planes. They don't just move in a line, in a straight line. They move in a plane, in a rectangular plane. Okay, you can see that you can pretty much flip an account by understanding this geometry, that if price hit this lower trend line, that is probability of buy, and if price hit the upper trend line, that's probability of sell. And even if you use these ones to get this plan, then you should have taken this trade and then take your profit here, and then you should have bought here, take your profit here. And then we also, at this point in time, we have probability of sales here. Okay, but one of the biggest issue in trading is, even when opportunity exists, if you didn't wait for the right price, you will still lose. That's why you need to enroll for my courses and mentorship for you to go find this stuff. And you have to subscribe to our VIP signals. We have categories for you to be consistent. The thing is not to see opportunity. The thing is to be consistent. You might see opportunity and still lose money, because to get that right entry is the hardest stuff in trading. To get that zero differential entry, whereby you enter a market, the market move in your favor automatically without going against you. That's the aim of trading, right? So that's what you really need to leverage the effort of others. Okay, so you see that this market is trading in this channel, then you step down to much lower time frame, especially 5 minutes time frame. It's very, very necessary. You know, the 1 minute and 5 minutes time frame are one of the things market makers used to actually make a lot of people lose money. Because if you are standing on that H4, you feel like you should sell, because the plane is bearish plane, is pointing downwards, right? The slope is negative, and you want to sell. But why you say you lose more money? You can lose as much as you can selling in this market. Why? Because in the 5 minutes time frame, the active plane is actually bullish order blocks. Are you getting it? Look at it. I'm trying to draw the plane, the 5 minutes time frame plane, and then you just get one plane right, get one line right, and then project a parallel line, and then move it to the swingings. I see that the direction of this plane is upwards. Why? The one we see in the higher time frame was downwards, but this one is upwards. And a lot of people have fallen victim of this mistake. They keep selling in this kind of plane. How do you expect to succeed? You see, this video is for those that really want to go find this kind of stuff. And you see, what YouTube will do is they will reduce the number of views on this video, because this will make brokers go broke. Are you getting me? So what you need to do is not just to watch this video because you still lose money. Yes, imagine you bought here, it will draw down. Your psychology is affected, then you will close the trade, and you say that all these YouTube tutors are lying. But you have to actually use our signal for you to make it. You can't do it on your own, because we have all the experience for years. Everybody is created, everybody is destined for certain things in life. If you are sick, you meet a native and a medical doctor. If you are sick in a traditional manner, you meet a herbalist, in your locals. And then if you are sick in the one that needs advanced like international treatment or non-traditional, then you meet non-traditional doctors, right? So everybody is destined for different things, right? So take advantage of this, so that's cool. You see how many pips generated. You see that SL was trading into positive. So this is over This is already over 250 pips, and this is very powerful, right? You see, with this idea, you should actually okay, there's something that's about sniper entry. Look at here. You know that in the H4, this place is what? Is a bearish plan. So this place, this is a trend line in the higher time frame, and there is probability of buy here. So if you have stage for buy here and the market move, you trade your SL to your entry, you see that you should have caught all this move. Okay, you see that you should have caught all this move. How many pips? Let's say you were able to manage to get this zero differential. The reason why I call it zero differential is because the rate of change of price here is just vanishing to zero. Just check it. Price came here and experienced a critical point. So that's why you should look for zero differentials, and they're basically, available near support and resistance. Okay, so you see, this is over 1000 pips. You see, even if you miss this zero differential, you can wait for another zero differential like this one. Okay, like this one. You can meet another zero differential like this one. Why did I call it zero differential? The reason why it's zero differential is, if you look here carefully, price drop here, but we are waiting for it to go down. It fails to go down. It lost all the energy. It have a zero energy outside this rectangle, because it is energy that creates movement, right? Something need energy to move. Okay, it is energy that run the server that creates the price movement, right? So that price movement, you can also model it as energy sucking, like energy dependent stuff. Okay, so if you look here, there is no candlestick existing within this vicinity and this time interval, so there are zero energy here. If you want to trade, you consider the regions of zero energy, and you will now find the region of infinity energy. You want to trade in the region of infinity energy. You want to trade in the direction of infinity energy. Okay, so once you know that the downside has zero energy, then you follow the up, right? So that's good. I'll be ending this video, but let me pretty much talk about order block before I end this video. Now, what is order block? Okay, the order block is, the last candle that appear for market to change direction. Now, let me show you what I mean by order block. You see here, immediately as this market was going in a reverse direction, immediately it reaches here. The last candle is a bearish candle. After that last bearish candle, what happened? The market starts shooting up. So we call this bullish order block. Okay, so because one bullish order block have existed, then we should expect a second bullish order block. And because a second bullish order block have existed, we should expect what? A third bullish order block. Okay, so when you have sequences of bullish order block, what should you do? You should buy. Okay, so that's good. So let's consider another let's consider selling event. You see in the H4, there is probability of sell here, right? Now you step down to 5 minutes time frame. When you step down to 5 minutes time frame, what do you want to do? We want to see a bearish event to start. We want to see bearish order blocks to get. We want to see the market to prepare for downside. That means we are looking for reversal signals. Very important. We are looking for zero differentials. And so you see that price went up here, drop, went up again, drop. Like, it cannot go beyond this rectangle. Okay, it can't just go beyond this rectangle. It just decide that nothing above, it can't go above this rectangle, meaning that above this rectangle we have zero energy. So why should you buy above this rectangle? Like, why should you buy this market and expecting it to go up when the energy outside above this rectangle is zero? So what do? You look for that zero differential and enter for sale, which means this level is for sale, right? Then even if we are not able to enter for this level, you look for you deploy support resistance, because you should be selling, and then bearish order block. First of all, you locate other blocks. So here we have an order block here, and it's bearish order block. So the last bullish candle here, we call it bearish order block because the last bullish candle here created a sell event or bearish event, so the market went down, right? So with this event, you are now going to believe that this market is selling, so you are now expecting another order block, another bearish order block. So we have another bearish order block here. So when you have an order block, you wait for price to come near that order block for entry, right? So you have that this one actually comes near, so you can enter here and put your SL above here, all right? And you should have sold massively to 500 pips. But another way to solve this problem is to deploy resistance in a bearish, since you know that it is not bearish event, so you deploy resistance, not support but resistance, because you should be selling. So now you locate a resistance level. This is a resistance level. Why? Price came to it and break it down to the downside, so it's a resistance. Because price break it to the downside, price is actually trading below it. So what you need is a pullback or reaction towards this resistance. So we have one pullback here, this one, we have this one, okay, we also have this one. We have any of these can work. So what you need is know that this resistance is actually a zero differential zone, okay? So you just need to enter this market and move. Just find a swing, find another resistance where you can put your SL, because you need to put your SL where price cannot reach, right? So we have another resistance here. This candle is a resistance candle, so you can place it above it. Why it is a resistance candle is because it creates a sell, right? So the opening of this candle is a resistance, so you place it here, and that's cool. Thank you for staying to this point. Make sure you subscribe and take action, leverage our efforts. The truth is, if you just want to apply this on your own, your entry is going to have issues, because you don't have the experience. You really need to leverage the effort of those that have the experience, right? So thank you and bye for now.